Hey everyone, today I was scrolling through the Nifty 50 chart and I found this distinctive pattern on December 1st. So let's learn about it. So what is a OHL strategy? It is an intraday trading strategy with a high probability to win. A buy signal is generated when the open price of the day is equal to low of the day, and where sell signal is generated if the open price of the day is equal to the high of the day. It can be a 5 minute, 10 minute, 15 minute, anything, because the high remains the same or a low remains the same throughout the day. Let's look into some real-time examples. So on December 1st, the open high-low pattern occurred in a few stocks and Nifty as well. So what happened here is the first 5-minute candle opened at a price of 20,183.7, and if you note, the low of the day is also 20,183.7, which means the open price is equal to the day's low. So it is a bullish pattern where a day's open is equal to the day's low. It is formed by a green candle. So in this bullish pattern, if you enter into a trade after the first 5-minute candle, and if you wait for a risk to reward ratio of 1:2, it is a high probability trade. So in this pattern, if you see the risk to reward here, the day started here and then the first 5-minute candle ended at 20,220. So now let's put a risk to reward of 1:2. So basically our target is at 20,313. Anybody who enters into a trade around this level is highly likely to hit a target. But for the day, the target is not hit. Still, we did not lose any money. We ended up with a profit of around the point risk to reward ratio. We ended up with a profit of a risk to reward ratio around 0.65. So I have taken some of the stocks. One is Apollo Tires. So let's see what happened here. So let's see the real-time example. Apollo Tire, the first candle open is equal to the day's low, and also if you zoom in, the wick is more or less equal to the body of the candle. So let's enter into the trade and keep a risk to reward of 1:2. Yep. So if you see, so if you see here, the entry is around the high of the candle and then the stop loss is around the day's low. And if you keep a risk to reward of 1:2, the profit is around at 438. And conservative traders book 50% of their profit and let the remaining run. So they achieve around one is to 3 for the 50% of their quantity. So it is a very good trade. Also make a note that it is a high probability trade, open high-low strategy. It doesn't occur every day, but it is a high probability trade. So let's discuss another one, which is Muthoot Finance. So in Muthoot Finance, the day high is equal to the open of the candle. So basically it is a bearish pattern. One can enter a short position around this level and then we can hope for 1:2 risk reward ratio. Unfortunately, here the short did not go as expected, but still we did not lose money. The stock came down around 10 rupees, but it did not go as expected. So let's check a different example, which is ICICI Lombard. So here it is a beautiful pattern. So the open and high are more or less same. Open is around 14,089 and the high is 14,089.15. So it is a 0.15 variance, but still the scanner picked it up. Let's check. So the first candle high and the open is same, and then the wick is more or less equal to the body of the candle. So one can go short around this level. Let's mark for a short position and create a risk to reward level. So 1:2 risk to reward ratio. It comes around 14,051. So here whoever entered around this level would have booked profit at 2 o'clock, around 2 o'clock. It is easy, guys. There are few things to remember. The risk to reward should be 1:2 minimum. Book profit when your target hits, or you can book 50% profit and let the remaining run till end of the day. So in OHL strategy, if the first 5-minute candle is more than 2% of the stock, then it is a no trade day. Do not enter. You can search for some other trade. If the first 5-minute candle is a hammer candle or it is a hanging man candle, do not take a trade. Basically the wick should more or less be same or smaller than the body of the candle. If the target is not achieved, then we can wait till the day's close. So whatever we get, it is our profit. So the stop loss for a buy signal is the day's low, and the stop loss for a sell signal is the day's high. With this we come to end of today's video. Thank you all for watching.